Welcome back to the John Trading channel. You can see that Ethereum has finally broken below this 20 exponential moving average, looking like we're going to continue more to the downside. Plus, Bitcoin is continuously following this EMA also to the downside, making lower lows consistently. Even the MACD is continuously moving to the downside, making lower lows, showing there's more sellers in the market. Plus, I have a lot of crypto news to go through with you today, so make sure you watch until the end of the video. First in the crypto news, Bitcoin supply on exchanges falls to a 5-year low. This is very bullish, meaning that there's less supply on exchanges that you can purchase, and if the demand goes up but the supply either decreases or stays the same, then we're going to have massive price movement in the price of Bitcoin. This story is great. Someone just took a $14,500 loan on 2 Rolexes at 12% APR from a complete stranger, all on chain. The Rolexes were sent to an escrow company who sent them back NFTs representing ownership of the watches. The borrower can then use those NFTs to tap into global liquidity rather than taking a predatory loan at their local pawn shop. If they default, the lender can use the NFTs to redeem the watches. One of the most obvious and easy to understand use cases of NFTs. Absolutely really interesting. Rather than actually going to your pawn shop or trying to sell these for dirt cheap, it's actually getting a loan, using that money, then you've got the NFT as collateral. Absolutely fantastic way to actually use NFTs in the real world. Next, I want to touch on mortgage rates. You can see that right now 30, 15 and 10-year mortgage rates are absolutely through the roof. The type of money that you would be paying on your house loan, if you were to get a loan from anybody else other than the bank, you'd probably be paying close to 15% interest. Absolutely crazy numbers. It shows during the last bull run for crypto, the interest rates were like 1 and 2%. So there was a lot more supply of money actually pumping into the market. The demand was increasing because the supply was more, and obviously we have a fixed supply of Bitcoin. So it really just shows how this is actually playing a part in the entire role, because people are now having to pay 2, 3, 4 times the interest rate that they were just 2 years ago. And it's also meaning that there's less demand for money. So there is less money supply in the world because less people are borrowing money to go out and buy Bitcoin, buy other watches, Rolexes, and all these other assets. This post I found really interesting from billionaire Mark Cuban. I only invest in companies that have utility and can do things that can't happen or can't happen as well without crypto. One specific value that is unique to certain blockchains are smart contracts. Smart contracts enable unique applications. I'll give you an example. Book.io did a deal to sell my book as an NFT. What makes this better is that the smart contract can track and immediately pay royalties on sales in the secondary market. This can't happen with physical or traditional digital books. I can quickly and easily purchase carbon credits as offsets and using blockchain burn them and remove them from circulation. Possible offline, but the blockchain publicly reflects the action. I can purchase weather insurance that uses a data feed and a public smart contract to immediately pay me or not based on the national weather stream. No risk of the claim not being paid, and it's paid immediately and I can go on. So I find that super interesting that billionaire Mark Cuban is definitely getting on top of NFTs, using the blockchain and actually understanding how it works and what use cases it will definitely have in the future, as it's just more productive to use the blockchain than traditional methods. Now let's move over to Ethereum on the weekly time frame. So we can see here that I was talking about in the last few days that we did not want to go below this low right here. I actually got stopped out of my trade in this area so early on the trade, and rather than losing an extra 8% on this particular trade. So you see, as soon as we got below this low, because I was saying there is potentially this support here using this 20 exponential moving average as it's sloping to the upside. But definitely as soon as we go below this low, it means that we're making lower highs and lower lows, meaning that we're more likely to be short in the market. So even just from this low, we're down an extra 5% to the downside. So an easy save on 5% of your entire portfolio. But through this area, we did have this positive sloping exponential moving average. We've finally broken down through it. We've been above it since the 9th of January. So we've never gone below. So we've been up for over 150 days. And now this is the first time we're actually breaking it to the downside. And it does look like the exponential moving average is also starting to trend to the downside. So what I do expect is some type of trading range action where we have a slightly down, slightly up, slightly down, slightly up exponential moving average. And we're potentially jumping between this sort of channel where we're incorporating a lot of this support in this area And we're also incorporating a lot of resistance up from in this area here is definitely what I'm expecting now. So definitely either sideways to down movement here, but I do expect the buyers will come back in somewhere in this area here. I actually think right through this area would be sort of a perfect level for buyers to come back in. Would still sort of be in that upwards trending trading range as well. So still not definitely bearish, but once breaking below this 20 EMA on the weekly time frame, which is what we're looking at now, it's definitely signaling that there's more high probability for shorts to continue, and any upside movements will then be sold off as a correlation. So now looking at Bitcoin on the daily time frame, all through this area, you can see we're basically in the form of a trading range that's slanted to the downside. And we're continuously using these areas as resistance and these lower lows as a support level. So, and again, all through this area, we've basically had a downward sloping exponential moving average. Even back, I remember back in this area through here, I was talking a lot about this being the valley area and expecting some downside movement. We got a little breakout, a little fake out breakout, because then we continued to the downside. Once we had a big candle, 5% to the upside, we've gone down from that level over 10%, yeah, somewhere around 12% to the downside. So obvious that when we have this downward sloping EMA and we didn't support in this area, we had that breakdown, we had another breakdown below. It begins to actually, you can see that we're not quite in that trading range. We're definitely more in a sidewards, in a downwards trending trading range than a sidewards trending trading range in this area. So potentially what could happen now is even come back, retest these prices, even come back and retest the exponential moving average, before then again continuing to the downside. So I was talking about that through this area, since we were using the weekly time frame for a lot of our buys, we were in that value zone and it was a decent area. But I'm happy, I always said that trading is not a 100% game. You only somewhere have around a 60% probability in your favor, and it's not going to happen every time. That's why you need to have stop losses in the market. You need to have a risk strategy where you're not risking too much of your portfolio and you're trying to gain a decent amount on your portfolio. It's all the true rules of trading. Even looking at Binance Coin, as I've been speaking about for the last few days, that Binance Coin definitely looks like it wants to come back and potentially retest this value zone in this area. But obviously, as I was speaking about before and in previous videos, since we've got a downwards trending EMA, we can only be taking shorts to the downside. So a perfect short would actually be coming back to this valley area through here in this area, and then actually looking for a personal short to the downside. Again, this isn't financial advice. I'm not telling you what to do. This is just my personal, my own strategy that I'm going to be utilizing just for myself. I'm just explaining it to you guys, basically for entertainment purposes. So really, we nearly came back into this value area. It looks like what we'll do is a bit of a 1-2 pattern. We'll come back, make a bit of higher highs from this recent lower high, and come into this value area and definitely look to retest at least somewhere around this area. I do expect that we could even make lower lows than this area, but coming down into this area would be a perfect level to at least take a portion of your position off and then continue to ride it to the downside. Solana in a very similar instance to Binance Coin as well. So we had this downward sloping trend line. We actually got a break above, but once we got this continuous closes below, anything below here would have been a closeout of the trade. And then you can see we continued over 30% to the downside, mainly because Solana was listed as a SEC, as a security, and it took a major hit. So even from that candle was basically 17%, the entire candle, it basically moved 50% just inside. So, and even in this recent times, we've sort of been in a small downwards trending trading range. It's been basically small up or small down price action, but we haven't been overly bullish or overly bearish. But potentially what we will do again is follow this exponential moving average as the EMA comes around. The price may just come back up into this area as the EMA comes around, and then look to at least test somewhere in these lows, potentially somewhere in this area again as well for Solana. Now looking at XRP on this chart, we're still above this trend line trading pattern, which is one of the only coins that is actually holding. We're making a bit of a 1, 2, 3 type pattern, a wedge to the downside, where we're making small wicks to the downside, definitely along this area, sort of like making an expanding triangle. You can see, if I actually connect this along, you can see we're basically continuously expanding to the downside and to the upside, basically in a form of a trading range where people are actually, rather than buying low, they're buying lower. And then when they're selling higher rather than selling at the old price. They're selling slightly higher. Rather than buying at the old price, they're buying slightly lower. So a form of an expanding triangle, still sitting in that bullish momentum. Reason being is we are above this trend line trading pattern. We can basically drag this all the way across, but a lot of people that entered into this area, once we got this break above, are basically break even on the trade. So is not much profit in the trade unless you're already out. We got close to 18, somewhere around 22% or to the upside. So depending on what your risk to reward strategy was, would have determined if you were out or not. But definitely in this area, since we're making basically that expanding trading range triangle, we're in this lower end. If you think about it, that's about 25%, another 25%, another 25%. We're in the lower 75% of this entire trading strategy. So in my personal opinion, if I was going to look to trade this, I'd prefer to look for buyers in this area than sells. I hope you've enjoyed today's video. If you haven't already, leave a like on the video. Make sure you're subscribed and you hit the bell notification. Plus leave a comment if you're enjoying these trading videos.